The next speaker will be a good friend of mine, and he really needs no introduction. This man is a graduate of UWI, did economics, so proud of it, his first degree, graduate of Bradford University, where he did his master's in national development. He has been an icon in the Jamaican financial sector. He was president of First Life Insurance, president of the powerful Sagicor Group, then chairman of Sagicor, and then he has moved on now to assist his country by being the governor, with the emphasis on governor of the Bank of Jamaica. So at this time I'm going to invite my good friend, Governor Richard Byles, who is the governor of the Bank of Jamaica and the chairman of the FSC.
Thank you, Leighton. David, appreciate you inviting me here. It seems like just the other day I was at the Jamaica Stock Exchange conference right here at the Pegasus. So 2 times in the last 4 to 5 weeks. I'm not sure it's because my speech is so good, or is it because it creates some controversial headlines, like this morning. But it's not my fault, it's Stephen's fault. He's the one that made the speech, and they keep rerunning the speech time and time again. But you know, contrary to what some persons may think, financial regulators and the securities industry do have a single common objective. And that objective is a strong, well-functioning capital market that efficiently allocates capital and leads to economic development. I think if you ask the regulators and you ask every member of the securities industry, we can all agree that that is what we want to do. To accomplish this objective, of course, we need sharp minds, innovative minds, and we need as well trust and confidence. I think those things together create success. If we look at the Jamaica securities landscape over the last couple of years, we will see the evidence of the sharp minds and the innovation. At November 2022, Marion quoted some numbers. If you add the on-balance sheet assets to the off-balance sheet assets, the securities industry represents 90% of the GDP. So it's even bigger than the 80. It's massive, and it has a profound impact on where we go and how we go forward. However, the recent experience with SSL and the sharp rise in interest rates internationally gives us a teaching moment. So let me spend a few minutes in the rest of the few minutes I have here to speak about this business of trust and confidence. Trust and confidence are built first and foremost on systems at the operational level. I'm speaking about systems to do with risk management, systems to do with internal controls, systems to do with the internal audit function, and to have proper international accounting standards applied to the accounting of the company. We need to invest in this set of control systems. We can't just want to bring in the brainy people on the revenue side. You have that. You have shown that. We need to also invest on the control side. Bring in the brainy people on the control side too, or build them. And maybe, David, that is a service that the Mona School of Business may look up for. We really do need to produce people who are very skilled in the issue of risk management, internal control, internal audit. I've worked in private sector, financial sector for, well, if you add the 26 years that I was a CEO, along with the 2 years I was a chairman, and I can tell you, it's a natural thing to focus on the revenue side, to look at that bottom line, to want to build and to produce a better profit than you did the year before. But where is the thought to the risk? Where is the thought to making sure that every move that money makes in your organization has 4 eyes looking on it? Internal controls. Where is the support that is given to the internal audit function? I mean, I can tell you, in many organizations, people regard internal auditors as humbug, getting in the way, asking questions that, well, don't you know the answer? Why are you asking? Or I don't know what it is you want to know from me. Can't continue like that. Every organization that is successful, especially in the financial sector, has to invest in building out that operational structure. It is the basis for trust and confidence. But also, we need to make sure that we have good, strong board oversight. And I think the board can't escape that they have a fundamental responsibility. They are, in a way, the last defense against any kind of malpractice. And to do that, they must have on board people who can understand and appreciate the reports that come to them. So too often, boards evolve. That is, they start when the company was small, and it is Mr. So-and-so and Mrs. So-and-so, along with 2 or 3 of their friends or associates. The company grows, it gets bigger, it becomes a major player, and you have the same board. Even though the management has changed, management has grown, you still have that board. Those boards have a responsibility, and they must meet that responsibility. They must have the skills that can understand risk reports, skills that can appreciate the role and the reports of the internal auditor, skills that make them understand that internal controls are vitally important, and they must ask questions about that. So the board can't be you and your friends. The board needs to be carefully crafted to be a composition of persons who represent investors, of course. I'm very much in favor of that. But also persons who can ask the odd question, persons who have a little doubt in the back of their mind and are not afraid to challenge either management or the chair about those issues. Persons of independent thought and of skill. So we need to find those persons and make sure they're on our board, because they are the last defense against experiences that we have seen. So I want to wrap up. I think that if there's a lesson that I want to leave us with, is a lesson that it's an equation. It's skill and innovation, but it's trust and confidence. It's those things that need to balance to lay the foundation for a consistently successful financial sector. I think that with the recently announced decision by the minister to create twin peaks of regulation and supervision, what you will find is that eventually you will get 2 regulators that are more professional, more focused, more skilled in their particular aspect of regulation and oversight. So you'll get a FSC that knows about market conduct and will roll out market conduct regulations that are far more profound than we have today. In fact, I think that if we went around the room and asked what is market conduct, we'd end up with a fairly narrow definition, but in fact it's not so. It's quite a wide and pervasive piece of work, and the FSC will be positioned to carry out that work. For the Bank of Jamaica, we will for the first time have a real in-depth understanding of the total financial sector. The very numbers that Marion quoted to you, and I did too, are a good reason why we do need to have this wide, all-encompassing understanding of the financial sector, because ultimately financial stability is our responsibility. And even before the Twin Peaks, if anything happens in the financial sector, it's the Bank of Jamaica that everybody comes to seek to find a solution, liquidity or whatever it is, because the other regulators don't have that ability. So I think you're going to end up in another 2 years or so with two good, professional, modern set of regulators that can only help to build the trust and confidence that you need for success in your business. Thank you, ladies and gentlemen.